This is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Erica Duignan of 1,000 Angels. Erica, thank you for joining us.
Thank you for having me. I'm happy to chat with you.
Great. So how did you get into the early stage investing world?
Sure. So I got into the early stage investing world back in 2006. I had spent about 8 years on the public market side doing investment banking, and I felt really disconnected from the companies that I was working with and how I was creating value for society. My last job in investment banking was actually as a fixed income trader, trading a lot of the asset-backed securities that actually caused the financial crash in 2008. So I think I had the foresight in '06 to decide to go into sort of a friendlier, more helpful to society asset class, and was lucky enough to get started investing with companies at the seed and Series A stage. So at that stage, it's wonderful to be involved with companies that are startups, that are really executing on a vision, creating new product, and bringing value to the market and amazing products to consumers and businesses.
Can you tell us more about the 1,000 Angels and what do you guys do there and how does it work?
Sure. So 1,000 Angels is a venture network that is strictly for accredited investors. So we use our technology platform to provide our members with a curated pipeline of investment opportunities at the seed and Series A stage. So members have to be SEC accredited to join. And what that means is simply that you have to be a person who either earns in excess of $200,000 a year or has liquid net worth in excess of $1 million, excluding your primary residence. So if you meet either or both of those tests, you are what we call an SEC accredited investors. So for those people, they're legally allowed to start building a portfolio of early stage investments. And most of our members are looking to deploy somewhere between 5 and 10% of their overall investable assets into early stage deals. And where we find that our members, can really realize value is by starting with small investments in companies at what we call the seed stage, and then following on in those that are the most successful during the Series A and B, when valuations are still very low. So the purpose of the network is to help people build a portfolio of very high potential return assets while helping to improve the overall risk return profile of their entire portfolio.
So I come from the angel world, or the dinner club model of the angel world. And as I see these tools come online, I always wonder what kind of impact that has on the angel world. What do you see as the biggest impact on the angel investing side or the accredited investor investing side that you're bringing to the table here?
Sure. Well, I think that what technology allows us to do is really break a lot of the geographic barriers. So I work with accredited investors actually from all over the world. I have clients in Texas, in New York, in California, in Europe, in the Middle East, in Asia. So the wonderful thing about this technology is that it means that any person, any investor who lives anywhere can get access to our pipeline of investment opportunities without necessarily needing to swing by for dinner. So we use technology to deliver the information that people need about a potential opportunity, as well as video interviews with the founder to allow people to get a sense for what that founder is about, right? So when you're at the dinner club, you might be watching them pitch over dinner, and instead we're using live streaming video to accomplish the same thing. So I would say that 1,000 Angels, while being part of the network, we're definitely working on offering amazing experiential events for members of our network to participate in. It's really for people who are just more focused on building a portfolio rather than sort of the social component of it, right? So we have less of like a local social component and more of a focus on bringing you top US based investment opportunities from all over the country to help you build a diversified portfolio in with a minimum time commitment.
Great. Can you describe more about number of investors, type of investors on there, tech, healthcare, et cetera, and just more detail about the platform itself?
Sure. So our investors are mainly high net worth individuals. Most of my clients on the platform are exited founders. I'd say most of our founders made their money with technology companies, but some with other more traditional businesses. And then we, of course, have some family offices and seed funds that are also members. One of the things, that we try to make sure is that all of our members are highly vetted. And no matter which investor comes into a deal, they usually have some expertise that they can add to a company. Our members are typically making individual investments of between 25 to 50 up to $100,000 per company. And all of the companies that we feature on 1,000 Angels, we start with at either the seed or Series A stage. So they're generally raising anywhere from $1 million to $5 million, with kind of the minimum total raise being about $500,000. One of the most important things about 1,000 Angels is that we are not a crowdfunding platform. So every single deal that's on 1,000 Angels already has a professional lead VC investor in place who has negotiated the terms of the round and is representing the investor class. And they've already closed on at least half of their total round. So they have sufficient runway for the company to get to its next milestone for its next raise. So we're never kind of investing in companies as sort of their first dollars in. They've already been vetted by VC funds that we trust to help represent the interests of the investor class and to lead the company to a successful follow-on raise and eventually an exit.
Are you running syndicates where you're taking the investors and putting them as one entity on the cap table, or are you just taking the investors and putting them on the cap table as they come in?
Right. So that's another advantage of 1,000 Angels. We do not do syndicates. So, I think that syndicates can be great, but honestly, it's much better as an investor to directly own the equity yourself. So all 1,000 Angels investors directly own their equity. They completely own their own pro rata rights. They don't have to pay any management fees or carry on the investments that they've made. So their entire portfolio consists of direct investments. And when companies end up being successful, the fact that you directly own the equity can actually make a huge difference in the overall performance of your portfolio, particularly direct ownership of those pro rata rights.
What kind of difference does that normally translate into as far as return goes, or is there a way to quantify that between being in a syndicate and being in there directly?
Yeah, well, it's pretty easy to quantify it. With syndicates, in the management fees can range from 5% overall to 2% annually for 10 years. So you're looking at somewhere between 5 and 10% of your total investment. And then, of course, if the investment is successful, which you obviously wouldn't be investing if you didn't think that the investment will be successful, you're also looking at another 20% of your total gains going to the syndicate managers. So with 1,000 Angels and direct equity ownership, you actually avoid all of those excess fees. We also don't charge any fees to the founders. So there's absolutely no moral hazard between us and the companies that we bring onto the platform because the companies are not paying us to be on the platform. And that also gives us access to more in-demand deal flow because obviously top startup companies are highly unlikely to be willing to pay 7 to 10% for somebody to raise money for them because they just don't need to.
So if the founders aren't paying and the investors aren't paying management fees, how do you monetize the platform to keep the lights on?
Yeah, sure. So all of our members pay a simple flat annual membership fee to get access to all of our services. And that ranges from $2,500 a year for individuals all the way up to $10,000 a year for family offices or investors who would like a little bit more of a personal, like sort of handheld approach. So it depends on really kind of how much service you need. But for a traditional individual investor, it's $2,500 a year to be a member of 1,000 Angels and get access solely to the investment opportunities. For $3,000 a year, you also get access to our events. So it's incredibly reasonable, also 100% tax deductible as an investment expense. So it's much cheaper than giving up 20% of your upside.
So how many deals would an investor see in a year?
Yeah, so we typically offer about 2 new investment opportunities per month. So you're going to see somewhere between 20 and 25 new investment opportunities each year. We know that people have other things to do besides evaluate investment opportunities. So we don't like to overwhelm our members with information or, paradox of choice. And we also want members to understand that if a company does get featured on 1,000 Angels, that it's not for them to select which ones they think will be the winners, but that the ones that we do select to be on the platform have to be incredibly special. We're usually evaluating several hundred investment opportunities for each deal that we actually feature on the platform. So the companies that do make it through are absolutely top quality.
So what sectors are they in, and what are some typical examples of the type of deals people see?
Sure. So we'll really look at pretty much any sector that is capital efficient and doesn't have tremendous technology risk. So, we're probably not interested in biotech, highly unlikely to do medical devices or anything that's incredibly regulated. But besides that, we're fairly flexible. Another thing too would be that you're less likely to see, a highly capital intensive clean tech type of deal on the platform. So the types of companies that we have are companies that are capital efficient and scalable. So we're looking for investment opportunities that make sense for early stage investors because they hopefully don't need hundreds of millions of dollars in follow-on capital that's highly dilutive in order to be successful. We're typically looking for target potential returns on exit of between 10 and 30 times. So that really kind of is a big factor that goes into our decision-making process around selection and being really careful about valuations. We're typically looking at companies mostly that kind of have valuations of 10 million or less. But for companies that are a little bit further along and somewhat de-risked, we might go up to, say, a $20 million valuation. But really anything that has what we think is a great risk-adjusted return, fantastic founders, a big market opportunity, proven traction, and a great team, we are willing to consider. So you're going to see a lot of variety. The other thing that's great about 1,000 Angels is because it's not a fund and we are individual investors deploying personal capital, we have a lot more flexibility around the types of deals that we can do. So, for example, deals that provide high IRR, consistent cash flows over time are something that actually work really fantastically for our platform, but might not be so attractive to a VC fund. So we try to be really smart about providing our investors with opportunities that can provide a target IRR of kind of like 25 to 60% or more.
Great, great. So just to shift gears a little bit, you said you're not part of the crowdfunding world, but it
Mhm.
looks like we're using crowdfunding technologies here with web displays and emails and those type of things. Is that right?
Right. Well, I mean, yeah, absolutely. We use technology, right? So we have a member portal and that's how we communicate the information. But technically, it's not crowdfunding. This is strictly only available to accredited investors. So we're sort of dealing with a very different community of investors. And kind of one of the premises of crowdfunding is sort of the idea of, hey, if at least $300,000 worth of investment comes into this company, then the deal happens. That's not how we're working. So these are companies that have already secured lead investors, have already closed a portion of their round, and we're basically able to follow on and take advantage of some of the great work that some of these early stage funds have done in negotiating great terms for the investors and identifying really great investment opportunities, and be able to add that to your own portfolio without kind of paying the fees and carry that you would pay as a LP of one of those funds.
Well, great. Well, I appreciate your sharing that information. In the last few minutes that we have here today, what else should we talk about that we haven't?
Yeah, sure. So I would love to talk about a really interesting class that I actually just started doing as part of the program for our members. So, one of the things that has been a big topic over the last couple of years is around professional athletes and how they tend to get a little swindled and lose their money doing a lot of early stage investments. So, I'd love to tell the audience about a great new course that I launched with Columbia Business School that I'm a program director and faculty member for, which is called Venture Investing for Professional Athletes, which we actually just had our first weekend session for last weekend. So we've got some really awesome NFL players and basketball players enrolled in the course who are spending a lot of time learning about early stage investing. So kind of a fun topic to tell your audience about. And the great thing is that we're making participation in the course open to some 1000 Angels members as well. So giving them a chance to sort of join these guys in taking some time to really understand the ins and outs of being an early stage investor.
Well, that sounds great. So, how best for the audience to get back in touch with you?
Yeah, sure. So they can visit our website if they're interested in signing up for membership. The website is 1000, as in the number 1000angels.com. Anybody who is SEC accredited, and that just means sort of meeting those income and asset thresholds, is free to try out membership for 2 weeks for free and set up an intro call with me. You can also email me personally. My email is Erica, ERICA, at 1000angels.com. And I'm happy to set up a time to chat further with you.
That sounds great. Well, thanks for coming on the show, and glad to hear more about Thousand Angels and how it's working. And hope to have you back for a follow-up interview very soon to dive into these topics in more detail and see how the program for the professional athletes go.
Yeah, I appreciate that.
All right. Well, thank you so much for joining us.
Okay, thank you. Have a great day.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.